Joining us now to discuss what's next for the Fed is Loretta Mester, former president of the Cleveland Fed and currently adjunct professor of finance at the University of Pennsylvania. Loretta, it's great to have you back on the show. Welcome. Let's start right there because you called this jobs report solid. What were your takeaways?
No, given the expectations that it was going to be a very weak report, it actually came in better than most analysts expected. And I think that's good for the economy. I think we shouldn't lose sight of the fact that everyone's trying to read, oh, what's the Fed going to do? But this is a good economy. And that's one of the remarkable things is that the economy has been very resilient through all the uncertainty. And so this is another indication of that. We do see some areas in that report that showed some softening. But remember, we expected that. And we kind of need to have that kind of happen to get inflation back down to 2%. So all in all, I think this is a good report. It's a good report for the Fed because they can continue their strategy of waiting to see how firms are going to react to the tariffs and then how consumers are going to react once firms react to the tariffs. And that's the inflation question. So I think all in all, I think this is positive.
All right. So assuming you ever even thought July was on the table, does this take July off the table? And what does it mean for September when the FOMC meets?
Yeah, I never thought July was on the table, and this certainly suggests that it would not be a good idea to change the interest rate in July, to lower it. September is a long time away. There's a lot of data coming out. We'll get a couple more job reports. We'll get 3 CPI reports, 2 PCE inflation reports, and all of that will go into how the Fed will evaluate where the economy is, but also more importantly, where it's going in the second half of the year. And that's sort of been the strategy all along is we have good data up till now. The economy's been resilient, but there is a question about how firms are going to react to the tariffs. Will they reduce their margins, which may mean they're going to be more cautious in hiring, or will they try to pass it along to consumers, which may feed into consumer price inflation? So that's where the Fed has to wait.